something I started doing about a year ago here at WOW that has been incredibly impactful is I put everything on a calendar. It seems like a small thing, but it has turned out to be an amazing idea that helps keep us organized and helps get the numbers quicker and on time and not let things slip by. I can't stress how important that is to have a rhythm, to have a system, because if you don't, then accounting is what gets pushed to last. It's just, it just is what it is. So people don't like to do it. When I started here at WOW, Todd was probably 4 months back from billing his clients, and it was so messy, and I had fun trying to catch up, but it's just not healthy. It's not healthy long term for a business.
Right.
So
Right.
I heavily recommend you saying, hey, I'm going to do this every day of the month, and you stick to that. When you do that, it's going to pay off in the future for you.
Welcome to the Spiro Podcast, managing your real estate photography and videography business. With your hosts, Todd Kivimaki and Craig Magrum.
Well, welcome to the Spiro Podcast, managing your real estate photography and videography business. Spiro is a software platform designed to really help you manage and grow your real estate media and marketing business. I'm Craig Magrum. I'm the host for the Spiro Podcast, and normally with me, flying co-pilot and pilot, we switch back and forth, is our owner and our founder, Todd Kivimaki, but he's not with us this week. So we have a guest co-host and guest in general. You've heard his voice before, you've seen his face before, and I'll introduce him in just a minute. But before we get into that, I just want to thank you, new subscribers to the podcast, whether it's the YouTube video version or you're listening on Podbean or Apple or Spotify, whatever. Thank you for stopping in and listening. Just want to encourage you, leave a comment. If you're watching the YouTube version, leave a comment on the episode. If there's something that stuck out to you or maybe a question that you have or an idea about today's topic, feel free. This is really, it's a community of education to really make our businesses better. So we would love to hear from you. You can also email us hello@spiro.media. All right. So back in September of, believe it was September, it was at least the fall of 2022, we had on as a guest WOW Video Tours CFO Derek Mayer. And we talked about the basics of business accounting. I know, super exciting topic for many of us, but a necessary topic. We have these real estate media businesses that we started. Might be a small business. You might be a solo shooter and business owner. You might be a regional company by now. But we started these businesses out of a passion for what we do. But for many of us, myself included, the number crunching isn't necessarily what we're most passionate and excited about. It might even be a challenge. And for many of us, when we start this business, we have to kind of brush off some of the accounting books and the things that we learned in college, or you might even be learning from scratch some of these concepts to run your business profitably and in a healthy manner, financially speaking. So Derek walked us through some of those basics of accounting in the fall of 22, and he's back this week to talk with us about some more advanced topics and diving deeper into the accounting of our businesses. And he's also going to address a listener question that came in from Brian in Connecticut. So Derek, welcome back to the Spiro Podcast.
Super happy to be here. Always love talking about accounting and helping businesses out. So happy to be here.
I will say personally, I am glad there are individuals like you that appreciate numbers, can understand them, have a great insight on them. Because guys like me, there's things that I just don't know. I have trouble sometimes with numbers. So I appreciate that you have a God-given talent to dive into this and assist a business, and others like you assist businesses in really being healthy and profitable. So thank you for what you do for WOW Video Tours.
You're welcome. And I'm learning new things every day. So even with all the time I focus on it, like I feel like I'm still learning a ton every day. So I'm happy to share my knowledge, and I hope it helps.
Yeah, absolutely. So let's dive into things. Sometimes sometimes we don't know what we don't know about a particular topic. And I kind of have that feeling that may be the case for today's topic. as we dive into more advanced accounting issues, there's just questions I just don't even know what to ask to cover. So I'm kind of thinking that you're going to lead this episode, and I understand you've got 4 points that you want to go through to help us understand business accounting a little bit better. But before we get into that, we always encourage listener and viewer questions and comments. And Brian from Connecticut, he's the owner of Flyby. I hope I pronounced that right. Flyby Visuals. He sent us a question. He said, "I love the podcast, and I've got this question about costs versus profits." And the question he had was, what are the important costs that we should be tracking as business owners versus the money that our businesses take in? And my initial thought, just as a guy that's not super deep into accounting, is, well, you got to track every cost and categorize that. I mean, that's just part of your basic accounting principles. But I'm guessing there's a more nuanced question in there, Derek.
Yeah, that's a great question, Brian. And like Craig said, all costs are extremely important to track and track appropriately. And somebody said it, I can't remember who it was, but like every dollar you spend is a dollar less of profit. So you really need to consider, what you're spending on, and is it helpful? So there are, costs that kind of can be lumped together to track a little bit more systematically. So I believe that's kind of what Brian's question is. So I'm going to start with actually the revenue.
Okay.
So for your month, you have your total revenue, and that represents a total amount that you're going to bill your clients for. Mm-hmm. And then we have two categories of costs. Your first is your cost of goods sold. This represents the cost directly related to that job, such as the photographing of the job and the editing of the job. And then to keep it simple, I would consider all other costs overhead costs. So that's how we do it here at WOW. We have, our total revenue, we have our cost of goods sold, and then we have all other operational costs.
Okay.
So if it, for a month, if you have $2,000 in revenue and it costs you $1,000, then the other $1,000 can be split to cover all your
other expenses.
Yeah,
exactly.
So that's how we do it at WOW. And kind of really my next point is I want to take you down that line of thinking and cover, 4 different areas of your business that I think you can systemize to help you get to the correct numbers to make good business decisions.
Okay.
Something I started doing about a year ago here at WOW that has been incredibly impactful is I put everything on a calendar. It seems like a small thing, but it has turned out to be an amazing idea that helps keep us organized and helps get the numbers quicker and on time and not let things slip by.
Okay, so when you're talking about putting things on a calendar, you're really setting up kind of a rhythm of activities for your accounting practices.
Exactly. Yeah, I can't stress how important that is to have a rhythm, to have a system, because if you don't, then accounting is what gets pushed to last. It's just, it just is what it is. So people don't like to do it. When I started here at WOW, Todd was probably, 4 months back from billing his clients, and it was so messy. And, I had fun trying to catch up, but it's just not healthy. It's not healthy long-term for a business.
Right.
So
right.
I heavily recommend you saying, hey, I'm going to do this every day of the month. And you stick to that. When you do that, it's going to pay off in the future for you.
Okay.
So that's really my, my first thought. Put it on the calendar. Do it every month. It's going to actually save you time, and it's going to save you money as well. So the first thing I'd put on the calendar is make sure all your jobs are invoiced. I talked about a little bit earlier about if you invoice like net 30, or you allow them time to pay your bill, then you really need to make sure you are on the invoicing and on the collections, or that can become, a disaster. And then you're basically playing bank for your clients, and clients, they know what they're doing. They know if you're not on it, then they'll take a long time to pay. They're not necessarily trying to take advantage of you, but that's just, they're going to go the path of least resistance. They're going to pay the bills that are going to collections first, or don't have late fees first. So if you are currently billing net 30, terms net 30, that means, it's due 30 days after you send the bill, then, you definitely have to be on your invoicing every month. You have to look, say, hey, who owes me a lot of money? Let me call them and make sure, see about payment, because with a small business, like, you just can't afford to float all of that forever.
Right. So is that something where you're sending out a weekly invoice, or do you do all the invoices once a month? Or, Spiro, the software that we have, you've got a couple of different options. People can pay right away when they order, or they pay when they download the media, or invoice the net 30 that you're talking. What, from your viewpoint, Derek, what's the most effective way to stay on that regular rhythm of invoicing and making sure people pay?
Yeah, great question. So what's super nice about Spiro is, you can invoice weekly, and that's what we do for our clients. It sends invoice every week. It's automatic. I don't have to think about it, the reminder part. Yeah, I definitely recommend sending it out weekly. If you haven't gotten anything in 2 or 3 weeks, give them a call, see what's going on. And some people are just like, hey, I changed my email address. Hey, I changed companies. And yeah, no problem. Let me change that. Let me send it to you, and they'll pay no problem. But others are, I'll call you back. And then you just got to make sure you keep on them to pay, which is a good question. And what Craig mentioned earlier, that I do believe for your business, it's important to either pay when clients place an order or pay before delivery. I can't stress how important I feel that is for your business, because think of all the time that goes into invoicing, all the time that goes into trying to collect the money and chasing people down. And it's just not creating I feel like, a strong relationship with your clients up front. It's not wrong to wait for payment, and it is helpful to clients. But I would challenge you guys to get the money sooner and do it in a way that's systemized, so that you can continue to focus on your business, not focus on trying to get money to grow your business. So that would be my pro tip or recommendation for you.
Makes sense. I mean, you go to Amazon to buy a product, you put in your credit card, you get charged right away. I mean, that's not a foreign concept to people. So, yeah. Correct.
And we're finding more and more people in our industry are doing that. So, which is a good sign for our industry.
All right. So there's point one. You had 4 points, correct?
Correct. Yep. Point number 2. So you got your invoicing done or figured out, or maybe it's automatic, so that you can cross that one off. But point number 2 is you need to make sure that you are reconciling your bank account. I know
it's so fun.
So I know this one gets a lot of grief, but it is very important for you to make sure all your line items, all your transactions are accounted for. It's important from a tax standpoint, and it's important from a planning standpoint. So if you don't feel comfortable with that, or you don't want to do it, then that's completely okay. Find someone that can do it. It's not going to cost you a fortune. It's not going to break the bank, but it is important enough that you'll save that money in the future, just with making better decisions and making sure everything is correct for your accountant. So point number 2 is reconcile your bank. QuickBooks and Xero accounting softwares. I find QuickBooks to be a lot more user-friendly, and Xero is not quite as user-friendly, but they're all built to help you, reconcile. So if you're finding it confusing, switch to a different accounting software, because reconciling is that important.
Okay. Yeah. Reconciling, super important. I'm kind of convicted a little bit, Derek. My personal reconciling needs to happen right now too. So thank you for the reminder on that. All right. So setting a regular rhythm of accounting tasks in the month, point 1. Point 2, making sure that you stay current with your reconciling and accounting for every transaction in your business. Let's go to point number 3. What's number 3 for you?
Yeah, point number 3 gets fun, because now that you know that everybody's been invoiced, that feels good. Now you know that all your line items are accounted for, which is just it should make you feel great, because you know that everything is in its place. So now I can look at my profit and loss statement, also known as your income statement, and now those numbers are correct, and you can start to make decisions based on those numbers. So that's when it gets really fun.
So let me interrupt you real quick there, Derek. You made an interesting statement. So everything is accounted for. Now we can start making decisions, other decisions based on that that profit and loss statement because we have our numbers in order. Can you give an example of what kinds of decisions would you be making based on that P&L report?
Yep, great. So I've always heard it said that an income statement won't give you answers. It will just allow you to ask questions. So you should look at an income statement and it should just create lots of questions for you. So to kind of now go into Brian's question of, tracking costs versus profits and other expenses, now you can look at your income statement. If everything is properly allocated, you can show like, hey, here's all my costs. Here's all my cost of goods sold. Here's all my operation costs. Well, if I compare that to last year, my cost of goods sold has increased 30%. Well, why? So now you get to do the fun work and say, hey, what happened? Oh, well, I hired another photographer who was, more expensive, but he could do drone, So yes, it cost me more per job, but look at my revenue. My revenue went up, So I'm actually making more money, even though there's more cost. So I just answered that question, but the whole point is I was asked that question, or it popped out. The questions popped out. So,
right.
Or it could be, hey, my operation expenses just increased 50%. Well, I took on an employee to cover some of my day-to-day operations and scheduling or what have you not. So yeah, that is going to come at a cost, and you can see it on the income statement, and then be like, okay, well, that frees my time up, so now I can go shoot more, or I can go sell more to try to get my my revenue higher. So it's not. It just helps you. It helps you try to solve the problems by creating the questions.
Okay. And it helps you identify too, okay, where can I cut some costs? What's eating into my profits that's not necessary. So questions like that.
Yep, absolutely.
Okay.
Yeah, we do that every year here at WOW. And I think I spoke back in the beginning of the year on budgeting and projections and goals. And yeah, you definitely need to watch those costs because if you're like, hey, I like to eat out, every meal, and that adds up very quickly. Or,
right.
Hey, this new piece of equipment is going to be the thing. And, and then it turns out it's not like that. Every dollar you do not spend is a dollar more on your bottom line. Right. So you definitely have to have that in mind. And you want to keep those costs in check.
All right, Derek. So we've covered three areas where we're diving a little bit deeper. Number one, again, reviewing. Number one, we are making sure that all jobs are invoiced. We're getting on a regular schedule of accounting tasks that we need to do to stay healthy in our business. Point two, we are reconciling all of our transactions for the month and staying current with that, and making sure that everything is accounted for, which leads to then your third point, reviewing the profit and loss once we have all those transactions accounted for, so that we can ask questions and make decisions for the company on a financial basis. Great stuff. We're diving deeper here. What does point four look like then for diving deeper into our business accounting?
Point four is probably everybody's favorite word, cash.
Oh yeah, there we go.
So cash is king.
Yeah.
And especially for our small businesses here, we always have to consider cash. And that's why I believe it's important to look at your cash flow statement. Your accounting software should have that as a core statement to use. And I would always make sure that you're looking at that cash flow statement, and that tells you where the money went. So think about cash flow statement. Where did it go? It always goes, it always goes somewhere. And so if you look at your cash flow statement, it'll show, hey, this is what we brought in. This is the money we actually brought in, not necessarily what we billed, what we actually brought in. And then it will take into account what we spent. So all your operation expenses are in that. All your direct cost of goods sold, any money that went out is the second part of that cash flow statement. And then you have, other cash, which could be, you as an owner, you took money out, and it could be you paid off something. So all of the cash is considered. So literally the entire cash picture is in the cash flow statement. And so
Okay.
you can look at the end of, at the bottom number and say, yeah, my business, I have more money in the bank or I have less money in the bank. And then you can know why that is.
Okay. So that last point, I think, is going to clarify somewhat the question I was just forming in my mind as you were explaining cash flow statement. I'm trying to, and this might be a dumb question, but there might be others wondering, if we've looked at the P&L, the profit and the loss statement, where we can see what we've spent and what income has come in, how is that different then from the cash flow statement that kind of sounds like it's covering similar or same things?
Yeah.
Is it that bottom number?
Correct. That's a great point. And all numbers do work together. The cash flow statement encompasses, all your investment activities or all the owner draws that the income statement doesn't necessarily have the owner draw, Now you may pay yourself a salary and as an employee, then that would be on the income statement. But if you're just taking distributions, that's not going to be on your income statement. That's going to be on a balance sheet item, which then filters through to your cash flow.
Okay.
So just to get a little techie there with
yeah. Well, that's where the you don't know what you don't know question for me comes in understanding some of the terminology and the vocabulary in business accounting. So thank you for clarifying that for us. So yeah, there's your 4 points. Do you want to just kind of summarize real quick again then the deeper dive into accounting, and we'll just kind of then wrap this up.
So my challenge to our listeners today is to systemize every month their accounting. Put it on the calendar. I know you don't want to do it, but when you put it on the calendar, you're more likely to get it done. And once that is done, the 4 points for you to remember every month are: number one, make sure your jobs are invoiced. Get them invoiced. Get the invoices out. If you get paid before delivery, if you take payment when you deliver the photos or payment at the time of order, then you can almost cross this point out because a lot of it will be done, and that'll make you feel good. So the second thing is make sure your bank account is reconciled. Get all those transactions. If you have a confusing one, get it done. Make sure those are all allocated correctly. If you find a cost of goods sold and an operation cost, move it out, put it back into the cost of goods sold. So make sure the transactions are allocated correctly, or hire a professional to do it. Number 3 is review your profit and loss. What is it telling you? What questions are you getting from that? And then go find the answer. If you realize something is off, go fix it. If you're not making as much money as you want to make, then maybe you need to add new products. Maybe you need to try to upsell more when you're at the property and say, hey, would you like a drone of this? And those should just start to create some actions for you. Questions, and then what are you going to do to fix it? And then review the cash flow statement. That is really the heart of the company, is it bringing in cash? If you invoice and not take payment up front, then you're going to have, it's a little bit harder to calculate your cash flow because you don't know necessarily when the money is going to come in. Or you might have 1 month where you got lots of money in, so you're like, wow, the business is doing great, but that's not really a clear picture of what's going on. So just make sure you're looking at that monthly, what's going on. And then also that should point out some questions too, be like, oh, that's where the money went. Do I really want to spend money on that? Do I need that? Because it's affecting what's coming in at the bottom line. So those are the 4 points. And then a bonus pro tip.
Ooh, we like bonuses.
A pro tip, an extra thing for those who are, maybe like you, Brian, that want to track more and love metrics. So here are a few for you to start tracking every month to really get an idea for what's going on in your business and what costs are increasing, and look back over time to say, hey, I'm doing good. Like, costs are going down, revenue's going up, great. Or costs are going up and it's actually outpacing my revenue, so I got to fix it. So these metrics are for you. The first one I track is average sale price. And average sale price is, I'll do it from a monthly level. So for the month, let's say I made $35,000. Okay. That's my total revenue. If you divide that by your number of jobs, let's say I did 200 jobs that month, that means my average sale price would be $175 per job. Okay. So that would be my recommendation for so you just start tracking every month is what's your average sale price. And you might notice if you're in a colder climate, hey, my average sale price is lower in the in the winter months. Oh, because people aren't adding on drone or something like that. And then it might start to creep up in the summer months as they start to add more. So that would be something that is a good metric for you to keep track of is your average sale price. And then challenge yourself to increase that. Because when you increase your average sale price, that means you're doing more at each listing. You're adding on more services at each listing, which is awesome for you because it's just a great use of your time to do more service while you're there, to make more money while you're there. So
and here's let me jump in there real quick too. Yeah. If you can increase your average sales price, you don't have to worry about raising prices every year as much, because if you're setting a certain financial goal and you're thinking, well, the only way I'm going to reach that is if I raise my prices across the board, which is a problem in and of itself with clients, because none of your clients want a price increase, right? Well, you can achieve the same goal by just, adding on more services and increasing that average sales price.
Yep, that's an excellent point, Craig, and I highly recommend that. There's other ways to get more money other than just increasing prices. So, but there could be a time when a price increase makes sense too. So you just have to weigh the pros and cons of that and make the best decision for you. So average sale price is the first metric that if you're not calculating that now monthly, start calculating it monthly and keep track of your previous months as well. It's a super easy one. The second point is your metric is your cost of goods sold metric. So this is kind of where again, it's important to track things over time. So cost of goods sold, we defined it a couple times as any expense assigned to that specific job. And in our case, I would assign the editing cost and the shooting cost. So for example, if your cost of goods sold for that month, let's say we had $35,000 in revenue, it costs you $10,000 to shoot those for the month, and you had 200 jobs, you take your $10,000, divide that by 200 jobs, that equals 50. So you made $175 per job. Your cost of goods sold was 50, which leaves the rest of your money for allocated to your operational costs. So and that's the third metric is your operation costs. So those would be the metrics that I would start tracking every single month and look for trends over time. If you notice your profit margin is shrinking, why? Is it my operational costs are increasing? Is it my cost of goods sold are increasing? Or is it my revenue is decreasing? And then why? Which one? And then figure out the why. If you can figure out the why behind it, then you can make more strategic decisions to fix the problem and keep that bottom line, that profit number healthy.
Perfect. So our guest this week, Derek Mayer, CFO of Wow Video Tours, with some more advanced and a deeper dive into the accounting of your real estate media business. Derek, thank you so much for taking us down this road. If people have more questions, like say they have some challenges reconciling, or they just have some more specific questions, is it okay for them to reach out to you? And if so, how can they get a hold of you?
Absolutely. Yeah. My email address is derek@wowvideotours.com. I'm happy to answer any questions. And, if you have more, technical or tax questions, I definitely recommend finding a professional. Find someone you can trust. You might have to talk to a couple of people, but feel like you can connect with them and trust them. And that will also help you for the future of your business.
Absolutely. Derek, thanks again.
My pleasure.
All right. Well, that wraps up another episode of the Spiro podcast this week. And again, thanks to Derek Mayer for joining us. And thank you for listening, for watching as well. If you found something helpful that could help somebody else's business, that you're a friend, a colleague, please share the Spiro podcast with them. Make sure you like it as well. That helps it get out to more people. The whole algorithm thing, and they make it more visible. Subscribe if you'd like to get notified of future new releases that come out. And finally, if you'd like to share a comment or a question, maybe a topic idea that you'd like to see covered about the business of real estate media, send us an email. hello@spiro.media is the way to get a hold of us. And specifically, if you have more questions about the Spiro software platform, we would love to talk with you about that as well. Again, you can email us hello@spiro.media or visit the website. It's very simple. It's just spiro.media. We make it pretty simple for you. And we'd be happy to schedule an onboarding call with you. We can do a Zoom demonstration, but we'd love to share with you the software that we've developed in-house to really manage and grow and expand Wow Video Tours business in the part of the country that we're in. So don't forget, you can catch the Spiro podcast both on YouTube if you want the video version, or if you're just listening in between shoots, you're driving, you can catch the audio podcast on any of the major audio podcast platforms like Apple Music, Spotify, Amazon, etc. So again, thank you so much for taking a few minutes this week to listen, to join us in this education community when it comes to real estate media business. And we just really appreciate you being involved. We appreciate your questions, your comments, and sharing the podcast with others. Just be thankful for the blessings you've been given this week, and take a breath. Have a great week.
Thank you for joining us for the Spiro podcast, Managing Your Real Estate Photography and Videography Business. This is a production of Spiro and Wow Video Tours. You can find out more about Spiro's real estate media business management software at our website, spiro.media.